friends, this is CA Ushma Jain. I specialize in NRI taxation. In this video, I am going to address those FAQs which I generally encounter from my NRI clients during this tax season. Without wasting much time, let me start with the questions. First question is, what is financial year and assessment year in India? In India, financial year starts from 1st April and ends at 31st March. For this particular period, if you have earned any income in India, if you have done any financial transaction in India, you should file a tax return in India after the end of this financial year. And the year in which you are filing the tax return, this is called assessment year. So let's talk about financial year 22-23. Whatever income you have earned from period 1st April 2022 to 31st March 2023, you should file the tax return after the end of 31st March 23. So financial year 22-23 is equivalent to assessment year 23-24. If I am saying that I am filing tax return for assessment year 23-24, it means I am filing tax return of financial year 22-23, because in this assessment year I am trying to report my income which I have earned during financial year 22-23. So can we start filing from 1st April itself? Practically it's not possible because of two main reasons. First is, department takes some time to issue new tax utilities through which we have to file tax return of previous year. And second thing is, whenever we file tax return, we consider AIS, TIS, 26AS statements, so that we can match our income and tax records with income tax department's records. But these records take some time to get updated. So it's quite strange, but for financial year 22-23 a proper filing was started only after 15 June, because it took lot of time to get these records updated in income tax department's data. Next question is, what is the due date of filing tax return in India? For financial year 22-23, due date was 31st July 2023. Next question is, can we do filing after 31st July as well? So answer is yes, we can do filing after 31st July also, and we can do this filing till 31st December, but it has few drawbacks. These kind of returns are called belated returns. In this return, some penalty will be imposed on you, which can be from 1000 rupees to 5000 rupees. And secondly, you won't get the benefit of carry forward of business and capital loss. You won't get benefit of few deductions, and there are few more limitations when you do filing through belated return. Is it fine if we pay our taxes while filing the tax return? No, it's not fine, because there is a concept of advance tax in India. So if you think your TDS is not getting deducted, or there will be some tax liability after the end of financial year, you should pay it in advance. Otherwise you will end up paying interest on late payment of advance tax, even if you are filing tax return before due date. Now few important points which are applicable only in case of NRIs. If you are an NRI and you have long-term capital gain which is taxable at a specified rate, then you won't get the benefit of basic exemption limit and deductions. So for example, you have sold a property on which you have long-term capital gain of only 2.5 lakh, let's say. Now if you think that you will get the benefit of basic exemption limit, which is 2.5 lakh, and you don't need to pay any tax on that, then it's wrong, because for NRIs this benefit is not available. If you are a resident and you have long-term capital gain of 2.5 lakh, then you will get the benefit of basic exemption limit and you don't need to pay any taxes. Now one more interesting but strange fact which is applicable in case of NRI senior citizens. NRI senior citizens won't get the benefit of 80 TTA or 80 TTB. What are these sections? If you are a resident or non-resident below the age of 60 years and you have interest on saving account, then you can claim deduction under section 80 TTA up to rupees 10,000. So, up to rupees 10,000 you can claim a deduction. Above that, if you have any interest on saving account, that will be taxable. What is 80 TTB? If you are a resident and a senior citizen, then your interest on FDs up to 50,000 can be claimed as a deduction. So, you have to pay tax only on that interest which is above rupees 50,000. But strangely, both these sections are not applicable for NRI senior citizen. So, if you are NRI senior citizen, neither you will get a benefit of deduction of interest on saving account or interest on fixed deposit. There are many other interesting facts which are applicable only in case of NRIs, which I will be sharing in my coming videos. So, before ending this video, I want to give an important advice to my NRI viewers. If you are an NRI and you don't have any income in India, but you are maintaining bank accounts in India, you are buying a property in India, or you are doing any financial transaction in India, even if it is not in nature of income, like receiving gift from your parents, you should file a tax return in India. Why I am saying so? Because see, what is happening, if you don't file the tax return, department doesn't know the source of funds. They are issuing notices to NRIs who have bought a property 5-6 years back and didn't file the tax return. I am not saying that it will save you from notices in future, but at least whatever you can report, like if you are getting a gift from your parents, it's better to report it under exempt income, although it is not required, it is not mandatory, but it's better. At least department will know that this is the transaction, this is the source of funds for you, which you may further have invested in India, or you may have repatriated out of India. So, it's always better to file tax returns in India, even if it is not required. Now, it's time to conclude. If you found any value in this video, I would be delighted. If you have any further questions, please feel free to reach out. Thanks for your time.